Everybody, welcome to the free video, and for today, of course, we had the FOMC meeting. So let's take a quick look at the correlated assets. For the S&Ps, we've had a pretty... I've been trading a long time, and it's been a long time since I've seen a V-shaped bottom. Like, they hardly ever happen. Like this, that's not a V-shaped bottom. A V-shaped bottom would be here, and then it rallies. You can see there's a process here in creating a bottom. That did not happen here. It's very, very, very rare. I mean, I just look. I mean, if you just look, especially like daily and weekly charts, you're not going to see a lot of stuff like that. So I look at this as just being very cautious, and it's like at any time we could head back lower. But of course, as a trader, the goal is to not, you kind of want to, when you're trading the market with the market, it's a dance, and you want to let the market lead. So do you short it here? Of course not. And one of the biggest things that I've been talking about when the markets get volatile is really drilling down, and even if you're a swing trader, looking at, if I can bring this back up here, looking at 78-minute charts or 60-minute charts. I prefer the 78, but really looking at the channels. And with this, you can say like, all right, I'm gonna get rid of these. Of course, the voodoo lines have been great. I'll keep the moving averages on there. But what can happen like this is because if you spend too much time looking at the news, you're gonna develop opinions, prejudices, and those will not help you in trading. That's a guarantee right there. So if you can see this downtrend, once we took out these lows right here, that's when you will really look at it. We stayed within this downtrend. It's actually pretty organized, fairly straightforward. And then once we broke to the upside of that, we've been actually in a fairly perfect trend. And you can see for the most part, there's kind of a, you can call it a little sloppy, but for the most part, this is an upward trend, right? So the question becomes like, when do you get excited about the short side? Do you just blindly say, oh my God, the market's going to go up forever, and do you buy? Or are you skeptical of this and start shorting? Well, the right answer is that you're neither. And that's the hardest thing to do. And I'll be, completely honest here. I look at this rally and say, what is going on? This was a legit fall. The fact that we've rallied, essentially beyond the 50% retracement and have recouped all the gains is like, wow, what is going on here? Does that mean I throw all caution to the wind? No. What does it mean? It means that if I'm looking at this and I'm skeptical, I'm not going to short. I'm going to sell call credit spreads, okay? And if I am going to short, then what I'm going to do is I'm going to look at a daily chart, and I have a very, very simple formula. This is a chapter in my book, and it's very, very simple, deceivingly simple, but very powerful. You just wait for a break. It was funny in the room today. It's like, John, this has been really coming up here. Should we short this? It's like, just wait for a break of the low of the high day. It's a very simple thing. So what do I mean by that? Well, if you're looking at the opposite of this on the decline, you're like, okay, I'm not going to go long until there's a break of the high of the low day. Well, low day, no break of the high. Low day, no break of the high. Low day, no break of the high. A new low, no break of the high. A new low. So great. When it breaks this high, unless there's another new low made, that's when you go long. Okay, long. Boom. That's plenty of room. So, of course, the opposite is true on the short side. So at this point, this was the high day. So if we break below this, I will aggressively short. At this point, I think we're stretched, and I'm selling 1 standard deviation call credit spreads. Okay, but I got the math in my favor on that. But the only time I'm going to do directional short is a break of the low of the high day. Okay, so hopefully that makes sense. So one question I get asked, because there's two ways to trade essentially. It's one, you can pick your favorite stocks, Google, Netflix, Tesla, Amazon, and just wait for setups. Or you can, it's not an and or, and you can also scan for an entire universe of other stocks for moments in time when everything is coming together for a big move. And I mean, that's what's happening right now with LL. So for daily, you got a squeeze that has fired short, okay? And if you look at, like, say, a 39-minute chart, you'll see that it's like, wow, there's a squeeze setting up. And anytime you have a situation where you've got a daily chart that's fired short and a 39-minute squeeze that's setting up, what that's telling you is that it's about ready to get destroyed, and it's one of the biggest heads up that there are. And these are hard to find. You've got to know how to find them. So this is what I'm going to talk about on Thursday. So 8 o'clock East Coast time, which is 7 o'clock Central. There really is two schools of thought in trading, and I found that having two schools of thought is kind of ridiculous because you can combine them. So the one school of thought is you have like 4 or 5 stocks or markets that's what you focus on. You get to know them, and as you get to know them, the better you get to know them, the better you can trade them. The other school of thought, and I actually like that because there are, stocks do have their own personalities, but the other school of thought, which is actually also equally valid, is if you can pinpoint moments in time when a specific action is most likely to happen, then it doesn't matter what the stock is, okay? And that's what this comes down to. So the stuff that I just showed you, those are not stocks that I normally follow. It's just those are moments that have been pinpointed that have a high probability of working out. So that's what I'm going to talk about on Thursday. Again, 8 o'clock East Coast time, 7 o'clock Central. You can go to this link, simplerstocks.com/scanner webinar. And what I'm going to do is just kind of show you how to scan all the major U.S. exchanges and identify the most promising stocks to trade, how to quickly look through thousands of stocks and apply the squeeze, waves, actually voodoo lines, ATRs, all the stuff that I like to use. How do you find this stuff quickly? Because you can spend hours looking through this stuff. And I can't tell you how much time I've wasted, being away from the kids, away from my wife, looking at damn charts. Whereas if I could get that stuff right, it could be done in a scanner. So it's kind of like, hey, this is the stuff I found where instead of spending hours every night doing this, just push a button and here it is. So simple scans that can be used to create steady winning trades for your trading account. Because as we all know, if you have a plan and you follow it, you have a better chance of being able to do this for a living. If you're just looking at the markets and you're staring at the markets and you're like, ooh, I think I want to buy this or I think I want to sell this based on your gut feel, that is not something that's going to last. That is not a business plan, okay? And I know that very, very well from doing this for a long time. What are the best time frames to use when narrowing down your list of daily stocks? And of course, learning about the most essential tool in my trading arsenal. So if you're interested in this, first name, email address, we'll send you the information and I'll see you on Thursday.